Okay, how is everybody doing? This is Andrew from Predictive, and we are live here in the US session of Nailing FX. Thank you for joining us here at FX Street. In July, I'm here on Tuesdays at 10:30 Eastern, US Eastern, at on the 7th and the 21st. I'm actually also on holding a session same time, but on our YouTube channel at Trade with UFOs. And so a lot of the time, if you don't find us here on FX Street, myself, Opa, Pedro, and Ronaldo, you can find us at on YouTube, also running some live sessions as well. So just to begin with, if you do want to reach me, you can reach me at andrew@tradictive.com. And sometimes we also do have questions that people have, and what I'll do is I'll show you where to kind of reach us if you do have questions about anything that we show in these live sessions here at FX Street or on YouTube at our channel there. But before I do dive into the session today, I do want to point you to our disclaimer here that, especially for those who are watching this recorded, this video clips demonstrations are for educational and instructional purposes only, and Predictive provides these videos purely for the purpose of demonstrating a method of using our products, which is order UFOs and order climates at this point. Users understand that all content used in the video is purely for demonstrating purposes only, and it's not a guide and does not provide any indication or prediction of actual results. So as a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive in using our products. And so, yeah, so that's our disclaimer at this point. All right. So what I did want to do, right, is just kind of take you through, especially if you're not familiar with us at Tradictive or Trade with UFOs. This is a good way to find out a little bit more about us. You can go to our website at Trade with UFOs, and if you did want to reach us and have any questions, you can type in there www.tradewithufos.com and just put my name there, Andrew, and what that will do is take you to this this page here where you can put your name, email, and indicate that you're not a robot, right? And to find out more about the apps. And once you do that, what you're then able to do, if you do have any questions, you can log in to your to the email address and the password that you use to register, and then you're able to search for any answers that you may have, and we're kind of still building up this database here. But you can ask any question that you want, and we will get back to you and answer any questions that you have about anything that we cover in the sessions that we do. And also, if you did want to get some orientation to other sessions that we have run in the past, you just need to go to our YouTube channel, Trade with UFOs, and just click on the sort of playlist that we have here, Nailing FX Live Trading, and you will see, there's a list of sessions that we've done in the past in this playlist here. So again, some of those show up from FX Street, others are what we have done just directly through the YouTube channel here. So if you do want to look for a session that I did here last month on FX Street, where we're actually talking about the pound yen, which is the segue into what I'm going to look at next. you can find those sessions here. Okay, so just a little bit of orientation to some of the resources that are available, that we offer and make available to all of you. Okay, so again, I really want these sessions to be interactive, and so feel free to in the chat just ask any questions, and I will take time to answer them, right? And so with that, I just want to go over what I looked at about a month ago, and just kind of review some of the things that have happened since then, and I've left the lines on here, right? So we can see what kind of went on, right, in terms of price action. So you have this sort of classic head and shoulders pattern put in, and you know the prior areas of support, right, were kind of taken out of this, and of course as price was moving to the downside, we see that these areas of UFOs, really, unfilled orders, really got absorbed. As we have a focus on selling, any unfilled orders on the buy side, when they're placed in the market, would get absorbed, right? And so we see this price action of the pound yen moving lower and then coming back up to test prior support, and coming down again towards these buy UFOs, where price rebounded higher and then came back down and had been basing around for a period of time to absorb the unfilled orders on the buy side, and subsequently that whole area has held, and we see a movement now back up to the upside. So broadly speaking, just to you know to describe what had been going on, as the auto climate as well kind of aligns to this, kind of tells us, we are seeing prices, as they go lower, the indication from auto climate is also telling us to focus on the short side, on periods where prices have moved higher. It has changed to indicate bias to the upside, and then so forth. Now how we use the auto climate really is aligned to how we look at timeframes, and this is just to give again a little bit of orientation about some of the technology that we have available, right, and that we use in our decision-making process, or part of our decision-making process. And a lot of that is aligned to the type of style, right, that that you may have as a trader, right? And so we commonly look at 2 time frames or 3 time frames, depending on how precise you or conservative you are. We align the intraday time frames to, and if we just focus on the standard side of the slide here, we associate intraday trading with making an assessment of the market climate, where we use the auto climate app on the 240 and the 60-minute. And our edge time frame is where we look at opportunities for buying and for selling, which is where our auto UFOs app comes into play, which I'll show you shortly. And if you are looking to be, if your style is more a swing trader, then the time frames that we look at would be closer to the daily and the 240, and then buying opportunities on the 15 and the 60. If you are a more position trader, then we would look at the market climate on a weekly and daily, and the 240 and the 60 for those buy or sell opportunities. And then, if you really are a long-term investor, you're focused more on the monthly and the daily sort of time frames. So in broad brushstrokes, this is how we at Tradictive kind of look at time frames from a multiple time frame perspective. And this would be the trading flowchart or methodology that we go through in our classes to give some structure to the decision-making process that we like to expose our students to, and kind of level set them on the terminology that we use and the steps involved in applying the technology that we have on offer, right? So this is just to give you a sense of how we approach things and how I like to also approach things with these sessions that I run, whether it be here at FX Street or on YouTube. Now, of course, in FX Street, we like to focus on Forex, but the other things that we do offer at Tradictive is also looking at other asset classes, stocks, options, futures, and so forth. So our technology works our apps work on any of those markets and on all sorts of timeframes to suit your style. So that's kind of where we come from in a bigger picture perspective. Okay, but let's get down to details. Okay, let's get down to details and also what sort of opportunities, what are we seeing today in the markets? What's been going on with the dollar in particular. I think what's important to understand about I guess trading, and I mean you guys are all either traders yourself or learning to trade or navigate the forex markets, and maybe just do a little bit of a poll. How many of you out there are currently active in the currency markets? If you could just uh, give me a sense, right? Give me a sense of are you are you kind of starting out, or are you um, more experienced? And that just helps me give a sense of how to kind of answer your questions here, or kind of run these sessions here. Okay. Okay. So I'm just looking at the replies here. So some are trading small accounts. So in terms of explaining each step in greater detail, date, daily, okay, right. And yeah, a lot of people are kind of stuck at home and boys. Okay, so some newer folks. Okay, all right. Okay, so majority sounds like you're just starting out. All right, so the purpose of these 45-minute sessions, these shorter sessions are of course to introduce some of the ways that we do things, of course. And yet you're right, George. It is difficult to kind of cover a lot of what we do in 45 minutes, and I think you'll find that as you're starting out, as you're starting out in trading, I mean, there's and focusing on the forex markets, there is a lot out there, right? There is a lot out there. There are a lot of options, right? To learn, and so I think what we like to do here at Tradictive is to really provide training around, of course, our technology, right? And we do offer a Forex course, and let me just go to here. Okay. We call it Forex in Action, and there's a couple of different ways that you can uh, gain the training. So we do have live classes. We run those. We try to run those every month. We've been on. We're looking to plan to do something maybe August, September. But again, if you're interested in a live online training, which is over, it's 5 3-hour sessions that we run live, and then they are recorded, and you can watch those afterwards. Or that we do have the self-paced course, which you can do at your leisure. So they're just recordings, and they actually do go through the step-by-step features of this methodology, right? Which can form part of the basis of your overall trade plan that you may wish to develop, right? And so we use our technology. We do provide access to the technology, the apps during the training and for 2 weeks after. So and if you decide that you want to continue using the apps, then auto climate is provided with a lifetime access. Trade with UFOs is a monthly subscription, right? Just so that you understand the what's involved there. But there is obviously it will take a longer time, but we do offer various options for you to get trained there. Okay, so okay, all right. So majority of you are kind of new, and so I'd like to kind of give that perspective, right? My experience, I've been in the markets for many years. I was working full time with a multinational company for over 18 years, and then subsequently went into full-time trading. So I've been in your shoes. I know what it's like to be working, or in between jobs, right? And looking to the forex market in particular to cut your teeth, right? To understand how it works and how to either generate some income from it, or to manage wealth, or just as an interest, right? Something that you're interested in doing, and gaining some exposure to, right? So the the way that so I guess there's two things I'd like to say. First of all, is that you need to give yourself time, right, to understand how to read charts, how to use the you know what do all of these indicators and all these sorts of things mean, and also find out for yourself what type of person you are, what sort of personality you have, which may or may not, which may surprise you sometimes, what type of trader you end up being. You may find that you may be in one sense, people say that you're a very patient person, but when it comes to trading, you're very aggressive, or vice versa. You may be a very aggressive person, but when it comes to trading, you're actually quite, controlled, or you're just consistent throughout, in terms of whether your personality is aggressive, and in your trading you're aggressive, so trading, affects people differently, and therefore is quite a unique, a unique venture that you're getting into. But I think one thing that is the same is that, look, when you look at a chart, everybody's looking at the same, information, and so it really is a matter of making sure that when you look at price, which is simply, you know, um, figures, right? plotted over a period of time, right? And so, you know, that's all it is just information, whether it be the dollar or the Aussie dollar, New Zealand dollar. I mean, it's all prices which are being represented on, you know, a scale of value over time, right? And how that progresses. And so I would say that, you know, one of the things you want to make sure that you do when you're starting out is really to look at things from, I would say, the higher time frames first, because it's like, you know, planning a trip, you know. If you've ever gone, you know, if ever, you know, if you ever used, you know, even if you're using digital sort of technologies, right? I mean, you open Google Maps and you kind of say, well, all right, I want to travel from my home, right, to, you know, if you live in the States, I used to live in the States in Michigan, and you know, I used to travel, you know, across to New York or across to Chicago, you know, up to Toronto, you know, drove to many different places, and you needed to, you know, really look at the big picture to determine, okay, well, what are the major routes that I want to travel upon, and you know, where are the you know, the toll booths, you know, where are the things that I want to, you know, maybe avoid, right? Because you know, you don't want to, you know, kind of optimize, right, the time it takes to get to your place, but also the cost of it, you know, in terms of gas and tolls and things like that, right? So really, you know, and you don't want to see all the details. You don't want to see, you know, where all the traffic lights are, and you know, you're looking at things from a big picture. And so that's really what you're doing when you're looking at the higher time frame, or what we, you know, described, you know, earlier as the common time frame, right? So if you're a swing trader, you'd be either looking at the daily or the 240 sort of minute chart to give yourself the bigger picture, and determine, well, what is the climate? You know, what's the market climate kind of telling you? And so by looking at you know, let's look at the Aussie dollar here, okay? Uh, you know, what the market climate is telling us at the moment, right? On a 4-hour time frame, is red is for down climate, blue is for up climate. But if we need to have we want to see a confirmed climate, you know, in order to go to that next step of understand or identifying an area to buy or sell. Okay, so let me go to a different market instead, the New Zealand dollar. Okay, so the New Zealand dollar on a 4-hour time frame is telling me that we have an up climate, which means that we have an upward movement in price, and therefore would be looking for opportunities to buy, right? But on this time frame, we are only assessing the climate, right? We're only assessing whether we want to be a buyer or a seller, right? And once we've determined that, right, along with other factors that we go through in our you know, training, or which, you know, you may have your own you know, ways of you know, determining trend and all that sort of stuff. This is where we would go down to you know, our 15-minute time frame, right? And apply the use of, and I'm going to move this gray box here, okay? And we would now, you know, ignore the auto climate, okay, at this point, and we would turn on our auto UFOs. And so what the auto UFOs is designed to do is identify the areas where there are high concentrations on the particular time frame that we're looking at, of what we call UFOs. Okay, what UFOs stand for are unfilled orders. Okay, so that's where the app is you know, designed to identify the areas where market players are likely to want to buy, right? Or if they're red UFOs, where they are interested in selling. Okay, so let me just see here if I've got, okay, I don't have any showing up here. Let me just go to a different time frame just so you can see what they look like. Okay, there's one up there. And again, let me just remove some of these other lines so that we don't. Okay, so the green UFOs could be olive in color, so that's kind of a not a bright green, right? And the red UFOs, so they're sell unfilled orders. That's where we believe there are high concentrations of unfilled orders on that flag sell orders, right? And so we would expect the sellers to come in at this point, right? And we would expect the buyers, more buyers to come in at this point. Okay, so that's how the what the purpose of the auto UFOs is there to do, is to identify those areas that we also would be interested in selling, and also those areas where we would also be interested in buying, um, you know, because that's where we believe large market players are also interested in buying and selling. Okay, so again, um, the app, is meant to do two things, right? Number one, its purpose is to bring a level of objectivity to your decision making, in that you want to be able to make a consistent analysis of the market that of the price action that is being charted in front of you, right? And and that's why we use calculators, right? Something as simple as that. It's got a bunch of buttons that you press, and what addition means, what subtraction means, and when you 5 plus 5 is always going to equal to 10, whichever way you do it, right? And that's what you want the algorithm to do for you, is basically do those calculations again and again and again consistently, right? And so it is what it is. What I see here is what you're going to see on your on your charts as well, if you use the Auto UFOs app, right? There is some calibration to it, right, which we don't which we go into at I guess a more advanced sort of stage when we talk about back testing and things like that. But for for all intents and purposes, you know for those who use the app, they're able to see exactly the same thing as I would, right? And therefore make have the same information available to them that I would as well, right? And so then it's just a matter of defining those additional parameters, which you may or may not want to put in in your decision making process, right? But those are the two things, right, that you want to make sure that you do, right, is make a trading decision that is based on as few moving parts as possible, so to keep things as simple as possible. So that's why we start off by saying, hey, look at the big picture, right? Look at the big picture. What is currently going on, right? What is currently going on? Is price, moving up, or is it moving down? How do we bring objectivity to that? We use the auto climate app. Okay, it's blue, right? That's just what it is, right? We were actually looking at things on the 4 hour, right? So it's blue, it's solid, it's up. Okay, so we focus on buying. End of story, right? Next step, right? Go down to our time frame, right, where we're trying to identify buy and buying opportunities, right? Because we've already eliminated the selling opportunities. We're not interested in selling. We're just interested in buying, right? So where do I buy, right? And that's where, Auto UFOs tells us, hey, there are these two areas, right, and these areas down here where we're interested in buying, right? And then it's just a matter of you now determining, okay, if I'm going to be a buyer, right? Do I like, which of these areas do I like, right? And you may deploy Fibonacci's, you may deploy some other moving averages or some other technique, right, to further refine your decision-making process, right? So let's say that, for example, you want to use, the Fibonacci's, right, to say, okay, for this move up here, I'm interested in certain certain uh, areas for which I want to be, a buyer. So let's say, the 55, the 61.8, right? And let's say the 38.2, right? 38.2, 38.2. Okay. So you say to yourself, hey, look, I like, the, retracements down to the, the 61.8, right? Which is what is here. Okay. So let me just make that a little less unclear. Okay, we don't want the background. And let me make that to the right. Okay. All right. So maybe a little thicker. Okay, let's make it like that. Right. Okay, so you like your retracements down to 61.8, and in particular, you like it even more if it aligns to the UFOs, right? And so that could be the formation of a of a trade plan, where you decide that you know you make a trading decision based on these Fibonacci's. I mean, that's one way of doing things, right? Um, and so and so you know your decision making parameters is going to be one thing that you're going to have to build out, right? Um, and decide for yourself how you're going to approach that, right? And from that is how much risk you're going to take, right? So one of the things that I would suggest to think about doing is just, if you, especially if you've got a small account size, right? I mean, I wouldn't worry too much around trying to make money, okay? In the sense of, don't think about the Ferrari, okay? What you want to focus on, primarily is in many ways the psychology of trading. Understanding yourself and your own emotions and how you trade, right? Um, and 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 one way to kind of help you manage that is by fixing the risk, right? So say for example you have you know let's say um, 1,000 $1,000, okay, right? Uh, what you want to do, okay, let me see if this is coming out. I'll make it a little darker, okay. Looks like it's got eyes, doesn't it? um, let me draw that again. Okay, let's say you've got $1,000, right? And oops, okay. And I would say, look, um, even at 1% risk, right? You want to risk 1%, right? So what's 10% of 1,000? What's 10% of 1,000? that's $100, right? Or 100 pounds, or yeah. Okay. So 1% is a dollar. Okay. So or 1 pound. Yeah. Right. So that's fine. I mean, you just keep it consistent, right? So that when you're, and this is the other great thing about the auto UFOs, what it does is it helps you identify the or it helps you define the risk parameters a little more. It gives you reference points, right? And I'm just going to take this Fibonacci away, right? So that we can see, okay, that this, let's say that this first green UFO, okay, is here, right? So that that range there, okay, is 65. Let's call it 40, and or 40. Okay, 42. Okay, let's call it 42, and let's call it 30, 34, just to okay, maybe 43, and 33. Okay, just to give some round numbers. Okay, so let's say you've got a 10 pip risk. Okay, actually I will make it 38. Okay, so that's a 5 pip risk. Okay, not that I would trade 5 pip risk, right? But all you need to do is say, look, I'm risking $1. Okay, and so what's your position size? It's 400, right? Sorry, this is 65.42. I need to put that in first. 65.42, and then 65.38. Okay, that should be, sorry, 43. Okay, and let's do let's do a 1-to-1, right? Let's do 5 here. Make that 5. Okay, so you notice what happens, right? When if you're risking $1, okay, your position size is 2,000. What happens if you say, all right, I want my area of risk, right, from an entry to a stop point to be a lot wider. Okay, so that's 65. Let's call it 65.20, right? My stop is at 65.20, right? So now my instead of being 5 pips, it's 23 pips, right? And I'm doing a 1-to-1, right? And I still want to risk $1. What happens to my position size? It just gets smaller, right? So you can still risk $1 and still account for the a wider risk in order to give more forgiveness, right? To allow price to move further into the area at which you're willing to buy at, right? Without getting stopped out, right? So you can use position size to help you manage your risk, right? Or at least to keep your risk consistent, right? Right. So just to go back and answer some of the questions. Firstly, yeah, the risk and reward ratio. Mhm. Right, and may use very large stop losses. So I guess uh, so it in many ways it depends on number one, uh, what is the market currently, how's it how where is the market? Okay, what is it doing, right? So if we just, for example, look at Aussie dollar. Okay, so what it currently is doing is it's going sideways, right? So in these sort of environments, um, if you're you know, let's say that you're bullish. Okay, so let me use the other one. So let's say that you're bullish, right? And let's say that you're, if you go to say go long at this point, right? Um, if we're trading in the range, right? And this is your risk reward type of ratio, 1-to-1, right, type of thing. And price looks like it's trading a range, right? Then you can't really have expectations of a 2-to-1. You know, if your expectations of price, trading a range, right? Now, if it was moving upwards, right? If it's moving upwards, then yes, you would have, you start to get a break of the prior highs, right? And you have higher highs forming, and higher lows forming. Then, you have a move upwards, right? Then you would change your expectations of your risk and reward to be greater than 1-to-1, you know? So, just mathematically, in any case, people like to talk about 3-to-1s, right? So that even if you got a win-loss ratio of 50%, right? You're still ahead, right? If you just do the math yourself, you'll still be ahead if you have risk and reward ratios of 3-to-1, right? And with the um, win-loss ratio of 50% wins, right? But to get a 3-to-1, right, or a 2-to-1, it also kind of depends on, or a 1-to-1 for that matter, will also depend on how the market is behaving, right? How does this, at that point in time, to even allow you to have the expectations of something that's greater than 1-to-1, you know? So the long answer is that there isn't any sort of recommendation. I would say, set your expectations of the type of risk and reward based on what the market is telling you it can give you at that point in time. And there are many other factors as well. That you also would need to consider, such as are you an intraday trader, right? Are you a scalper? Are you a swing trader? Are you an investor? And so, this will also influence, your expected, risk and reward ratio. Because if you're a scalper, you're not trying to get, or if you're an intraday trader, you're not trying to get, 10-to-1 type of trades, right? You're just trying to, maybe get, maybe you are trying to get those 1-to-1s or 2-to-1s or 3-to-1s, depending on the type of market that you're trading. And I think in particular for stocks, for Forex, if you're trading the pairs, right, there's going to be different spreads, so to kind of go back to answer your questions around, to the point that you're making about large stop losses, right? One of the things to take note of there is that sometimes the stop losses may be a little wider because of the spread, right? And also, therefore, depending on whether you are using a broker who builds in the commissions into the spread, right? Or whether you are using a broker that offers more, raw spreads or narrow spreads and charges you a fixed commission. So commissions can be $5 or $6 per lot per side, right? So that's something you kind of have to shop around for, right? But if you did have any questions on so, or you want any suggestions, on some of the brokers who offer those raw sort of spreads, along with commissions, just email me and I can reply you and give you uh, some of my thoughts on that. Um, or even better, would be just to answer, um, just to maybe ask a question in FAQ, right? Um, okay, so just going back to the auto climb, there was a question on auto climb and auto UFOs software compatible with Forex brokers. Yeah, so TradingView. So we offer the access to the apps through TradingView, and the brokers, right? If I can, if you go to um, the menu and look at some of the brokers who are connected to TradingView. So if you want direct sort of execution, and it depends, again, you kind of have to look at here and kind of see what assets they offer. So Oander, if you're in the States, I think you could use them to connect to TradingView. There's TradeStation. Uh, yeah, there's Saxo. Um, there's Forex.com, which is Gain Capital. So I'd kind of look at look through TradingView and see who's connected. But commonly, what we do is actually recommend to people that you don't have to be connected to you don't have to have TradingView connected or our apps connected to your broker directly in order to use it. In our training, what we do is we actually have people execute off of their phones, and the reason why we do that is because it means that you kind of have to do something. You can't. It takes a little bit more effort to key things into, or I guess it gives an additional step, right, for people to put their order in, right, and be disciplined about it. Whereas sometimes when you clicking on things from the screen here, right, you can be a little less disciplined, about putting the stops in particular, right? And so what we want to make sure people do is be disciplined, and when they're placing their entry and their targets, they're also putting their stops, right? So so in short, yes, I mean you can use this technology. Your analysis and decision making is all through TradingView, and then when you execute, if you have a connected broker, you can execute from your charts. But we recommend keeping that separate. Uh, you know, on IG, yeah. So I think what it is that I mean, stick with the broker that you have, right? And so what you just need to do is just make sure that you account for the spreads, right? And so your data feeds, right? Yes, your data feeds may be, forex.com, or I mean, there's a number of them, right, that you can use. So, and what you may want to do is kind of see which forex broker offers, the data feed that is closest to what you get through your existing broker. But I think what we go through in our class is some parameters that we use to give you a little bit of room buffer, right? So that when you're placing your orders, you have a you basically just adjust for the spread essentially, and like I was illustrating here, hey, look, if you fix your risk to be, to be $10 or a dollar or whatever it is, what changes is your position size, so you may have a wide, that could be 75, and that could be 50, right? But you still just want to risk, $10, right? Well, then your position size becomes, 2,000. You know, if it's a narrower, um, stop, okay. Well, you still want to risk 10,000. Well, your position size is 4,000. So this is how you can really adjust for, I guess, the spread and the price action, from your broker, by adjusting things on the position size, right? Okay. So so actually, I spent a lot of time, today on the uh, I guess the approach that we take at Tradictive to training people on how to use our apps. We try and give as much as support as possible, right? Which is why the sessions on FX Street are available. That's why we run them. We also have our YouTube sessions where we've got lots and lots you know um, of information out here, that you can go through, and also, just an opportunity to join us and to, um, ask questions if you have any. Okay, and if it just comes up here, right? So feel free, right, to drop us an email or to send us questions, right? Um, that you have, and that way we can just make sure that when you do join us in these sessions, we can you know hopefully give you the right sort of perspective that we have to the markets, as well as to how we kind of look at those who are wanting to participate in the market to do it safely, right? To do it with the right mindset, with the right sort of uh, approach, that and expectation, I think, is really what I want to say. Got to give yourselves the right expectations, because you're unique people. You all make your decisions in your own ways, and what we try and do is provide a framework from which you're able to build out how you want to trade the currency markets in particular, and to do it in a way that kind of fits your lifestyle, that fits the capital that you have. But we definitely want to make sure that it's accessible, to as many people as possible, because we know how challenging it can be, when you're starting out in trading. And I think that's also the philosophy of FX Street, to provide the tools and the resources available to those who visit them, and become their subscribers. Okay. So with that, I've got a minute left, but hey, thank you very much for joining us. Hopefully this was helpful to you. I know that we didn't really go through any markets this week, but I will do that starting from next week. Go through the markets, go through how we approach analyzing the markets and making our trading decision based on the methodology that we follow. So do join us next week. I'll be on YouTube next week, but the week after I'm back on FX Street. Okay. So hey, thanks again for joining me. I do value the time that you're spending with me, and so good luck, and see you next week.